Hello traders, the title of this video is how to combine the RSI trading and moving averages crossover like a pro. How to combine RSI trading and moving averages crossover like a pro. Alright, so trader has been talking to me about moving averages crossover. This is my number one secret, all right, when it comes to moving averages. But today I'm in a good mood and I want to share with you, all right, how you can combine the RSI trading and moving averages crossovers, all right. But one more thing before we continue, I need to mention to traders, okay, that are more advanced, that when we are talking about moving averages, all right, we can replace moving averages with trend lines channels, all right. So you see on my chart here, we have the red channel here. You see the red channel, which is indicating to us that the market sentiment is bearish because the slope of the channel is a declining channel. So in this scenario, all right, we want to give priority to bearish signal on the edge of the declining channel. All right, I need to say that before we start talking about moving averages. Why? Because when we start talking about technical indicators, traders very often will tend to forget the price. So I need to talk about this before we go into the moving averages and RSI, which are technical indicators, a very exciting subject for beginners, for new traders. But as we are growing as technical traders, we tend to pay attention to what? Market geometry, area wave, price structure. So don't get caught with how should I put this? The appealing of technical indicators. All right, that's enough. So what are we looking for? All right, very simple. If the moving average 50 is below the moving average 100, that's the first condition. Moving average 50, I have here simple moving average 50, that's the orange line on my chart. The red line is the moving average 100, and the green line is the moving average 20. I will not say anything about the moving average 20 in this tutorial, all right? But I'll leave it there for a reason, and other traders will understand why I'm doing that, okay? So, the moving average 50 is below the moving average 100. If the price, repeat, if the price is below the moving average 50, and the RSI period 14 is overbought, that's a bearish setup. Did you say bearish signal? No. Don't say bearish signal. It's a bearish trading setup. The next step, we implement a top-down trading method to trade it. So for new traders, understand that is a trading setup that will generate the trading setup. The source, okay, the origin of the trading signal is the trading setup. So what have I said so far? Moving average 50 is below the moving average 100, first condition. Price is below the moving average 50, second condition. Third condition, RSI is overbought. That's a bearish trading setup. For bullish trading setup, the moving average 50 is above the moving average 100. Very, very important. Some traders understand why. Very, very important. The price is above the moving average 50, second condition, and the RSI period 14 is oversold. That's a bullish trading setup. This is how one can combine the RSI trading with moving averages crossover like a pro. Remember, so as I mentioned it at the beginning of this tutorial, I tend to talk about it a lot because it's so important. So don't get upset with me, all right? We are following the trading drill, the setup, the signal, okay, and a low risk entry point. This is the trading drill. So whether you are using TSCW24 as usual 8 or any other trading method, always follow the trading drill, the setup, the signal, and the low risk entry point. We can go a little bit deeper, the setup, all right, to the data more mature, the setup, the validation of the setup, okay, all right, and so on, and so on, all right. Setup, the validation of the setup, the validation of the setup, the signal, and the low risk entry point. All right, so let's look at this chart. I'm on the daily chart or the British pound, US dollar currency pair. So I'm on the daily chart. As you can see here, the moving average 50s, the orange line, is below the moving average 100. Okay, yes or no? In this session here. So we want the best scenario. We want the price to stay below the moving average 50. This is here. So I'm going to place some vertical line there. There's one scenario here below the moving average 50, the orange line. Below the moving average 50. All right, below the moving average 50. All right, below. Now that it went up above it, so we ignore those who went above it. All right, okay. So let's look at the RSI period 14. Was the overbought? Where is the overbought zones? I will use 70. All right, 70. Okay, let's get it right, my friend. So please. Technical traders, as always, when you learn something new for the first time or you find a video on YouTube about trading that is very, very exciting, use a demo account, test it, retest it, practice until you master it. So looking at this, so here the RSI couldn't reach the overbought zone. Here it couldn't. Stop at 57. So this is what we call RSI hook. I'll be talking about it when the RSI, let me explain this very fast. Talking about RSI hook is when the RSI quickly pop its head, so to speak, above the 50, and for one reason return quickly back below the 50. That's what we call RSI hook. So it's no bullish, it's trying to be bullish and they push it back down. So we don't want to make it too complicated. Here the RSI couldn't reach the overbought zone. But you can see that. How do we know that the thing is overbought? The price itself is overbought. If it's going up and the common central line is kaput, you know that the financial instrument is becoming overbought. That's how you know. Overbought means it hit resistance and it start coming down. So a simple way to know that a financial instrument is overbought, talking about the price itself instead of the technical indicator, you have to differentiate. Okay, I'm choosing my word carefully here. When I say RSI overbought, I'm not saying that the price is overbought. There is a big difference. So the first confusion that we want to clear today is that whenever you say somebody is saying to you stochastic overbought, understand that it's the stochastic that is overbought, not the price. Somebody says to you, RSI overbought, it is the RSI that is overbought. Or RSI above 70, okay? The RSI has a high chance to reset itself, pulling back before going up. The financial instrument that we are trading, which is the price, is only overbought when it hits a resistance and it starts coming down. Here it is, it's with me a common centralized couple. Though the RSI couldn't reach the overbought zone, the price itself was overbought here below the moving average 50. This is a bearish trading setup on a daily chart. One will implement a top-down trading method to trade it, boom, 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 down. All right. Let's look at the second line here, the vertical line. Am I talking to myself? Okay, hold on, please. Let's zoom into it. All right, because now I'm using a software which I do not use before. I like it on the browser, but for suddenly I've been forced by TC2000 to use the software. Why TC2000 can do something like this? I am #1 fan of this software. Now they are accepting me. Why are they doing that? Okay, I will be sending them email to question all these sudden changes, maybe for business reasons, we will know. So now I'm struggling a bit because with this software, because I use the browser, you remember? So okay, here it is. So let's pay attention to this one. Enough of my complaints. So yeah, look at this one, okay? The price below the 50, moving average 50 is below the 100, all right? It's all clear. Okay, RSI, you see here, it couldn't reach the overbought zone. It was quite close to it. But as I explained to you, the quickest way to know that the financial itself is overbought is when it hit a resistance level, either horizontal resistance or a trend line. So advanced traders may look at this and say, Joe, this is for babies, because they will draw their trend line, you see, draw their trend line, and they want on the edge of a declining channel, a declining trend line, bearish trend line. This is what we are talking about. This is what I'm talking about at the beginning of this video. Color it down in pink to see it here. You see the pink bearish trend line on the edge. By the way, talking about on the edge, I have posted yesterday, or in fact it's today, right? Today I posted a video at the George Trio YouTube channel. The title of that video is Trading on the Edge Explained. I highly recommend that video to all technical traders on this planet, unless you're on a different planet. Are you on a Mars? All right, let us know. Okay. Trading on the Edge Explained at George Trio YouTube channel. A very, very important video for all technical traders on the earth. So here it is. Okay, you see now? There was a gorgeous setup which a lot of technical traders will prefer. The RSI finally is overbought. Everybody's satisfied now. Here it is, overbought. The price below the moving at 50, and the moving at 50 is also below the moving at 100. I think some of my die-hard fan will be a little bit upset with me that I'm sharing this in a public place, but that's okay. All right. You see, overbought, price below the moving at 50, moving at 50 below the moving at 100, and the RSI 14 is overbought. This is a bearish trending setup. How do we know that the financial instrument is overbought? When the common center is kaput and the price starts changing, implement a top-down trading method to trade it. Do you think that this is a useful trading strategy? Do you find it useful? Well, let us know. Let's begin the conversation in the comment section, all right? Okay? Well, there is one here. You see this section here, the RSI is overbought. I want to zoom into it more. It's not very... Okay, I'm going to move it here. What's going on here? Okay, we are here now. RSI is overbought. Price was at that point in time on the edge of the moving average 50. So at this point in time, we'll implement a top-down trading method to trade it. You can see that here there was no signal to sell because the price quickly went up more. You see, it went up with one candlestick bar, one daily candlestick bar before coming down. Because of another, you see this trend line here, another trend line here, the median line of the red channel. You see, this was going on. Professional are trading with the trend line. That's why I explained to you in the beginning of this video. Trend line, channel. Okay, so instead of selling below the median line of that red channel, they push it to the edge of the median line before they sold it down. This is the more advanced way to trade instead of using the moving averages. But traders are asking for it, and I'm recording it here. Moving averages, crossovers, and RSI. So now let's go back to the bullish setups. All right, moving up price is above moving average 50. Moving average 50 is also above the moving average 100. And the RSI period 14, okay, is oversold. There is one example here. So price is above moving average 50, the orange line. Moving average 50 is above the 100. All right. And the RSI period 14 is oversold. Here it is on the chart. This is a bullish trading setup we implement a top-down trading method, or we follow the trading drill setup, the validation of the trading setup, the signal, and the low risk entry point using a different time frame. So we see this on the daily chart. The daily chart is our trading setup, the hourly time frame for the signal, and the 10-minute time frame for the entry. See this on the weekly chart, trading setup, 4 hours or 2 hour time frame. I prefer 2 hour time frame for the signal, and 15-minute time frame for the entry. We see this on the monthly chart for position traders, monthly chart trading setup, daily chart signal, hourly time frame entry. Am I making sense? All right. Okay. So this was going on. All right. So there was a good one here, beautiful one here. Here you can see that when the RSI is oversold here, where my cursor is now, follow me carefully here. The price was below the moving average 50. This is not what we are looking for. Talking about this specific, okay, trading discussion, how to combine RSI trading and moving averages crossover like a pro. But you can see that the price still went up because the price pulled back near the median line of the red chart. Advanced traders can know what's going on here, and the price quickly went back above the moving average 50 before it came down. Okay, so here we are. Look at this one. The RSI is oversold. So what we want to do when the price is below the moving average 50, and the RSI is oversold, that's another topic. There's another way we can do it. Okay, there's another way we can do it. But I don't want to talk about that today. All right. Today I want to talk about one specific trading setup using moving averages. The moving average 50 is above the moving average 100. The price is also above the moving average 50. And the RSI is oversold. That's a bullish trading setup. There are more to this. Okay, I will be recording another video where we will look at another specific trading method. I don't want to confuse you. I want you to go away and test this one. Try it. Do you like it? Does it suit your trading style? Oh, George, this is another mumbo jumbo from you. Shut up, please, George. Oh, George, I love you so much. Here it is. Okay? And so on and so on. Okay? All right? So YouTube is a very democratic platform. So here we are. We put the information out there. You test it. You make your own decision. Okay? Very simple. All right? For the bearish signal, moving average 50 first condition, moving average 50 below the moving average 100 first condition. Second condition, price is below the moving average 50 completed. Third condition, RSI period 14 is overbought, or the price itself is overbought. I explained the price itself overbought, common sense is kaput, start coming down. This strategy is valid on all time frame, but the best approach is to implement. This is about trading like a pro, right? So when we talk about like a pro, we mean that a trader is adopting the mindset of professional trader, which means he or she is following the trading drill in all trade, setup, signal, low risk entry point without violating the market pattern and the trading triangle. If you have any question or suggestion, this is your best moment, okay, to shout out and say, George, I'm fed up with you this time. I will unsubscribe for 1 hour, but I will resubscribe, okay, a few hours later. Okay, if you have any question or suggestion, put in the comment section, and in due course, all right, I will be recording another video, okay, to answer your specific question. We are the TSTW24 traders talking about how to combine RSI trading and moving averages, a crossover like a pro. We were using the moving average 50 and the moving average 100. Another way to improve this strategy is to look at the slope of the moving average 100. Is the moving average 100 sloping down? Beautiful. That will give us more confidence. Is the moving average 100 sloping up or horizontal? That will help us to filter out the false setup. So pay attention to the slope of the moving average 100. If it's sloping down, more attention to bearish setup. If it's sloping up, more attention to bullish setup. Okay. Happy trading to you all, and speak to you soon.